Hello, everybody. Jackson here with the Wealth Squad. Today we'll be talking about Facebook or Meta, whatever you want to call it. All we know is the stock keeps on falling, right? There has to be some price where it makes absolute sense to buy the stock, to buy the shares, right? And we have to figure out what that price is. However, in the meantime, it seems like it keeps on falling. We don't want to miss that opportunity. So today we're going to be looking over the latest earnings report, the 10Q, as well as some financial data for Meta to determine if it's the easiest, smartest decision of your investing career or a value trap. And that's what we're going to be talking about today. All right, so let's get into this. By the way, guys, how to look at this specific page is you look up SEC EDGAR, EDGAR, and eventually you just press like keywords and stuff and you get to this page. And you look up Meta, you get to this page. It's the latest 10Q. So we're going to look at the earnings and determine for ourselves if it's worth buying. So remember, Facebook is trading for $93 right there. Okay. So we're going to look at, this is the balance sheet from December to now. You can see cash has gone down, marketable securities, total current assets, we could just determine that, has gone down from 66 billion, you can see in millions, so 66,666 is 66.6 billion, down to 58 billion. And then you can see the total assets has gone up because of, we can see other stuff right here. It's gone up from 165 to 178. All right, that's a good thing, right? They're worth more asset-wise than what they were. Liabilities and stockholders' equity. We're looking at the current liabilities, which last year was 21 billion, now 22 billion, so not much change. Total liabilities, because that's some debt in there, operating lease, liabilities, non-current, and then other random stuff has gone up from 41 to 54. Actually, it seems right here is the caveat to that. You can see they took almost $10 billion in debt, which they did not have last year. So it's gone up from 41 to 54, almost 55. So total liabilities and stockholders' equity has gone up as well as the assets. Okay, you can see that here, 165 to 178. This is in billions. Now we're looking at the income statement. We're going to focus on this because this is the same time last year compared to the same time right now. 3 months ending September 30th, and that's when they released the earnings report after September 30th. So 2021 had $29 billion in revenue. This year we had $27 billion. And the last 3 months ended September 30th. So it's just a quarter, right? This is 9 months. This is the quarter. And we can see the total costs and expenses has gone up from 18 billion to 22 billion. We can see the net income has got cut in half. You can see 9 billion, 4.4 billion here. Then we could look and see total share-based compensation expense. Well, first the earnings. Geez, look at those earnings. So you can see the basic and diluted EPS. We can just look at the basic. It's gone from 327 to 164. So cut in half, right? Let's actually get out of this. Let's look for ourselves. Facebook 1 year ago was trading for 326, right? Earnings have since been cut in half. Thus, it would be a fair argument to say the stock should be at least half of what it was, right? 326. Half of that is 160 whatever, right? 160 something. 163. That's half of 326, and that's exactly what earnings were a year ago, and right now they're about half of what they were. So we're looking at 163 as potentially what this stock is worth just based off the earnings, okay? What we also have to factor in is which way the earnings is going, right? Which way the earnings are going. If they're going to keep going down, then of course the stock is going to fall because that's where the earnings are headed. But besides that, let's keep going. We'll just look at stockholders' equity, cash flows. This is important. So you can see right here, the net income has gone from 29 billion down to 18 billion. I wish it would say which. All right. Okay. 29 billion, 18 billion, and that's just net income. And you can see the net cash provided by operating activities. So what they took out of the business as in cash has gone down from 39 billion to 35 billion. We can see right here the net cash used in investing activities. They invested 13 billion last year. Now it's 21 billion, and it's in those parentheses because they lose it, right? Purchase of property and equipment. They bought property and equipment, so of course it's gonna go down because that's the dollars that they use in investing activities. Cash flows from financing activities, you can see right here as the net cash used in financing activities has got split in half, and the total cash has gone up around $400 million. Okay, we can see right here cash paid for income taxes has been split in half, so they're paid less in taxes. Whatever. Right now, so here's some important stuff just to read, just to read pretty quickly here. Third quarter of 2022, we made a decision to sublease, early terminate, or abandon several office buildings under operating leases to align our real property lease arrangements with our anticipated operating needs. As a result, we also began to review the related operating lease right of use assets and leasehold improvements for impairment. So basically, they tried to terminate their real estate leases to save on costs because they're not really using it, right? They need to review their operating lease right of use and get in line with their anticipated operating needs. So you can see some losses from cutting out that lease, whatever, right? All right, let's look at revenue. Advertising. Oh, and by the way, guys, there's two different segments here. Family of apps. That's Facebook, Instagram, WhatsApp, whatever else they have. I think those are the main three. And then Reality Labs is Oculus and things in the VR section, right? So advertising went down a little bit, about 1 billion. Other revenue has gone up 20 million. Family of apps has gone, you can see 28 to 27, so it's gone down. This is obviously where we're seeing this. Total revenue has gone down because Reality Labs revenue is split in half, and you see you lost $1 billion here. So of course you're gonna lose some money. Not lose money, but you're just not making as much. And you can see the actual demographic here. So United States and Canada has gone down. Europe has gone down. Asia Pacific has gone up slightly. Rest of the world has gone down slightly. And we're looking at the net income, whatever, we already talked about all this. Now what I want to find, which I'm going to go up for, is what we talked about earlier a couple videos ago. All right, this, they're just going crazy. Okay, so in the 3 months that they had this report, right, they bought 40,000 shares in thousands, so that would be 40 million. 40 million shares they bought. Okay, their average price paid per seems to be around 150, right? They bought 166, 169, 146. Current price for Facebook is 93. So they're down even more in their investment. And now they're only allowed under the plans and programs to purchase 17,000 more this year, I believe. I'm just gonna see here. Okay, so they only have 17,000 more shares. I'm sorry, 17 in millions. Oh, that's a dollar value. Total number of shares in thousands. Okay, so 15 million. Um, yes, 15 million more shares to buy, and they already bought 40 this quarter. And the thing, their share price is 2/3 of what it was just when they bought it a couple months ago, last month. So they're averaging down on its way down, right? So 150. Their average is right around here of just this last quarter, right? So they're already down 40%, but their average for the entire operation of repurchasing stock as was before this quarter is in 300. So let's say it brought down to, you know, I don't know, 275, right? We could assume it's 275. They're still down 66% of on their own stock. Not very good, right? The earnings report, I also read some more. It included saying that they're going to keep piling money into Reality Labs, and that's where they're losing money, and that's where they're stockpiling all the cash, and that's where the major concern is for investors. But they're going to keep doing it. So that's my concern with buying Facebook right now is it's not done, right? They're still going to pile more money into this VR. Maybe if Zuckerberg cut his losses, be like, all right, we're just focusing on the family of apps instead of VR, maybe the stock, I'm sure, would rally. The stock would jump. But that's the concern with people is they're piling money into Reality Labs and they don't know if that's going to work or not. But they're going to keep doing it, right? That's what they're going to keep doing for the year coming. So let's look at the actual financial data, right? Their market cap 247 billion, income of 28 billion, right? So they're trading at an 8 PE ratio. This times 8.88, you get the market cap. Now sales is 118 billion. Sales doesn't have very much to do with it, right? It's just revenue. Their book value per share is essentially what the company would trade for with all of their assets in place. $46 a share, right? So we gotta get a cut in half to get to that price. Cash per share is 15. Basically meaning if it trades for $10, you could sell the company for $15 a share, and that's just in cash, right? That's the worst case scenario. So that don't pay too much attention to that. I'm sure that won't be in play here. They've 87,000 employees. Seems like a lot because it is. The PE of 8, forward PE of 11, which means earnings is going down. You can see right here because the PE is going up. Price per sales is 2 because you can see this times 2.09 equals that. Sales times 2.09 equals that. Price per book 2.01. This times 2.01 equals that. Whatever. Price to free cash flow is 9.39. Finviz says that's good, and that's, you know, the more the merrier, right? So quick ratio and current ratio are cash and liability valuations, ratios, right? This tells us that Facebook could keep paying its liabilities, expenses, and have no worry for the next year. Debt to equity, of course, they just took out debt for the first time. So that jumped. It was at 0, now it's at 0.08. Very small compared to other companies. Not too much of a concern here. The EPS is 10.49 for the last 4 quarters. Next year it's expected to be 8.38, expected to fall. EPS next quarter is 2.32 is what they assume. This year's earnings per share has grown, but next year's is going to decline. That's what you see here. Besides that, you can see their gross margins as well as their operating margin, profit margin, their return on investment, return on equity, return on assets are all very good. Good for them, right? It's looking like a good stock. However, you have to look past the numbers, look at the company. What are they doing? They're piling money into something that is not known to be a good investment yet. It's very risky, thus the stock falling from $300 down to below 100 in the span of a year, right? Off 73% from the 52-week high. Of course, down even 3% from the 52-week low because it's looking back. 52-week low was that $98. RSI of 23, under 30 is generally undervalued, right? That's a buy. So it's at 23, looking good. Now could be a good time to definitely load up. Of course, all this negativity over here because the stock's been falling nonstop. So who knows what's going to happen with Facebook? Let me exit out of this stuff. All we know is some prices are like stupid cheap, right? We see March 2014 when it was going for $72 a share, or July 2015, which is already below. Isn't that crazy, guys? Is you could have invested in the stock in March of 2015 or July of 2015 and lost money if you held until now, because they offer no dividends, right? So it's just a perpetual drop since this time last year. I don't know. It's a risky stock, but risk does sometimes equal reward. The higher the risk, the higher the reward. So you can make some money in this. It might be a long hold. There could be better opportunities out there, but the thing is, they won't be as risky as this one. So might as well look elsewhere. This one, a lot of big names are talking about it. Of course, it's going to be known for a long time that this stock was a falling mess, right? A failing mess. And it's better to invest in those companies that no one really talks about. Less drama, and it helps you sleep at night. But whatever. If you have stock in this, hopefully you're just started buying, 2 days ago. It's not a pretty sight to look at. I was fortunate enough not to get caught in this. I was caught in this over here, but I sold at a very little loss. I think I lost like $70 off of 20 or 30 shares. So not anything big, but hopefully you guys are in a good position, not losing too much money on this stock. I know a lot of people that are. Hopefully you aren't one of them. That's the video, guys. I hope you learned something about Meta today. If it's a good buy or not, that's up to you based on your risk profile, right? You like risk, go for it. If you don't, I'd stay away. That's my opinion. I hope you learned something from this video. Thank you for watching.